Happy Sunday, everybody. Welcome to another edition of the Sunday Playbook brought to you by the Black Wealth Rebels. Today, we are talking about Dividend Kings. And so if you're not familiar with dividend investing, you want to tune in for this. There's going to be a lot of gems dropped here. Good morning, fellas. How y'all doing?
What's going on?
Sunday got the hoodie on. Every Sunday you see, shadowy super coder mode.
Oh, that's what I got to do. I got to put the hoodie
on. That's how I pull up on Sundays, man. It's just check the tape. Check the game tape.
Check the tape. What's up, Corey? How you doing?
I'm living, man, so I ain't going to complain. Ain't nothing to complain about.
All right. So before we get into this, I want everybody to know the Black Wealth Rebels made us, what I want to say, an outing yesterday. We were seen in these streets, y'all. We about to get busy, and we being cussed out by a couple of our sisters. So just want to put that in the universe. It's all love. It's all love.
Yeah. Yo, for those that are here with us live, please let us know what's here. I see a couple of folks pulling up live. I know a lot of people will watch this on the replay, this class. CT, what's up? But for those that are here live, let us know you're here live. We do have another quick class this morning. We're gonna talk about, we're looking at this upcoming week in the market. And this for those that are not members of our village yet, please go to blackwealthrebels.com and join our village, because we are, like I said, we met up yesterday. We are consistently working, and we're creating things specifically for village members. We just dropped something this past week only for village members as well. A little bit of real estate analytics tool for those that haven't seen it. And I'm going to make some updates to the page today to make sure that all the content that we create is back there for the village. Allison is there. What's up, Allison? Emika's here. Yeah, so we got our folks here, man. A lot of folks pulling up. I see more people coming in. As you come, let us know you're here. But that's it. BlackWealthRebels.com. Please join the village. There's many tiers. The genius is in the building. We got Dina here. What's up, Dina? So yeah, man. Hey, listen.
I would get everybody the horns, but it's too early for that.
Please.
Yo, Kamari's been up since 3 a.m., man. So you gotta forget it, brother, man. I woke up later than that, and I saw Kamari posting stuff at 3 a.m. I'm like, yo.
No, it was actually later than that or earlier than that, whichever way you want to go.
I just saw when I saw the stuff come through, it was like 3 a.m. and I'm like, Kamari is out here, wilding right now. But with that being said, though, good morning, everybody. Thank you for everybody that pulled up live for this class. We about to get into talking about some dividends and Dividend Kings specifically. This was a request, by the way. The reason we're going to have this class this morning, because it's a request. We do a class every Sunday morning, and we talk about, we're looking at this upcoming week in the market, and that's what it is. And by the way, before we get started, this is not investment advice. I want you guys to know that. It's for informational and educational purposes only. Do not take anything we say and like, yo, Corey told me to do this, so I invested in that, or Jimmy told me to buy this. That's not what we're talking about. We're talking about what we're looking at, and we do just to teach a little bit. We bring some presentations, some slide decks to teach a little bit. A lot of times it's things that people ask us, or in our experience, what people need to understand. So that's what it is, man. Lorraine is in the building. What's up, Lorraine? Anyway, man, good morning. Brent, good morning. So we got a lot of folks pulling up, more people coming in. Man, it's a lot of folks here right now, man. So thank you guys for pulling up. It's Sunday morning. I know, some folks is in church. This is our finance church. Kamari, let me know when you're ready for me to, get the computers puting, man.
Let her rip.
All right, cool. And by the way, for those in the village, like last week's class and this week's class, we're going to pull this section out and put it in our options 101, because a lot of what we're talking about still relates to options. But I want to make sure that you can come back and watch this portion, this class portion, as much as possible. Because after I go through this slide deck, we're going to talk about some of the stuff we're looking at in the market. So you can watch the full episode, but if you're a member of the village, you'll also be able to watch the presentation. With that being said, today's presentation is about Dividend Kings, right? We're going to take an in-depth look at Dividend Kings, their history, and how to invest. The first thing I want to start with is what I start with every week when we do a class. When you invest in a stock, you are buying ownership of a company. And I'm going to consistently say that, because I think that we have to start to visualize what it means to invest in a stock. Visualize a little bit different than we currently do in terms of looking at stocks as just being this thing I own. I hear people say, I bought stocks. I bought stocks in this. Like, no, you're buying ownership in a company. Part of that is if you have a company that is profitable, sometimes not profitable, which can be problematic, but a company that is matured, what they could do a lot of times is they give money back to their shareholders in the form of a dividend, right? So as companies make money, they pay their bills. When they have what's left, they can pay out a dividend to their shareholders. Not all companies pay dividends, and not all companies should pay dividends. And even some companies that do pay dividends probably shouldn't pay dividends. But with that being said, because you are an owner of a company, you are entitled to a dividend with certain companies that you may own when you purchase equity in those companies via the stock market. I don't care if you own one single share, you are an owner. So we're going to start with that. So the thing about Dividend Kings, a lot of people consider them the gold standard of dividend stocks. There are a number of dividend stocks all across the market in various sectors, whether we're talking about consumer goods, whether we're talking about real estate, technology. There are a number of dividend stocks. But Dividend Kings, people consider them the gold standard of dividend stocks. They are the creme de la creme. So what are Dividend Kings, right? They are companies that have increased their annual dividend for 50 plus consecutive years. That's right, 50 plus consecutive years. The majority of us here, including myself, aren't 50 years of age. So these companies have been increasing their dividends before we were thought of, right? They're very rare. Dividend Kings are a testament to strong financial management and a commitment to shareholder returns. So there are fewer than 50 companies that hold this title, which makes them a highly exclusive group. I'll name just a couple of them that you guys may or may not have heard of, right? So Procter & Gamble, Coca-Cola, Johnson & Johnson, Colgate Palmolive. And as you can see, some of the things that I'm naming are goods that you may or may not have in your home, literally right now as we speak. AbbVie is another one, Target, PepsiCo, Lowe's. So you get where I'm going, Walmart. So these are the
established.
Yes, these are well-established companies that have increased their annual dividends for 50 plus consecutive years. So what makes a dividend king, right? Longevity. We're talking about companies that, first of all, have been in business 50 years, right? In order to pay dividends or increase dividends 50 years, you have to be in business 50 years, right? So that means that these are long-standing companies that have been contributing to our economy for, a substantial amount of time. They have financial strength. For the most part, Dividend Kings have a strong balance sheet and they have stable cash flows, right? They're recession resilient. They have the ability to survive economic downturns. These are well-established, well-managed companies, and they often are leaders in their respective industries. Years ago, I used to work at Johnson & Johnson, right? And what was interesting was just watching the entire operation. Sometimes I would take a step back and just be in awe of how organized and how well ran the company was, right? Because if one person wasn't there or one person passed away or one person left, it didn't matter. It was a machine. And I bring that up because a lot of these companies are machines. They're actually, some of them have bigger balance sheets in some cities, right? In some states. So they're almost like, their own entity. They're their own government. I know that sounds a little bit crazy, but when we talk about a company like Coca-Cola, which is a global brand that, is able to even spin off their bottling company to its own company that's listed on the stock market. Johnson & Johnson just recently split off. I think it's called Kenvue, I believe, is the other company. But whatever the name of that company is, they split off their consumer products brand because they also are operating in pharmaceuticals, right? So we're talking about large corporations that, I don't want to say this, but, almost too big to fail. Like they are that big and that resilient and have amazing management and leadership and have increased their dividend for a long period of time. This is why they're the cream of the crop. This is why they are the Dividend Kings. Now, there's also something called a dividend aristocrat. So I want to make sure you guys understand the difference between the two. And I know I made a statement last week that, some people thought was a little bit controversial when I said that dividends are overrated. Doesn't mean that I'm against dividends. And I want to make sure you understand that because I was having this conversation with someone after the show. I'm not against dividends. But I think that when you look at your portfolio, when you're building a portfolio, they have a place in your portfolio. Some people go all in on dividends. It's the be all end all. And depending upon your objective, that could be cool if you're looking for income. But if you're looking to grow a portfolio, that's the point I was making. If you're looking for growth, this may not be the best solution for you.
It's nuanced.
It's very nuanced. Everything, we were just talking about that before we came on. Everything in life is nuanced, but no one wants to really deal in nuance, right? Because
everything that's substantial in life is very nuanced.
Okay, see, so even that comment is nuanced.
Facts.
but with that being said, the fact of the matter is, when you're online and when you're looking at certain spaces, people feel like I have to take a hard stand one way or the other because that's what gets the computers puting and get you clicks. But we talking facts here. You know what I'm saying? And, society is cooked anyway. So we're going to stick to our integrity and talk about what's reality is. Anyway, So how do Dividend Kings compare? Dividend Kings have a longer dividend growth streak than Dividend Aristocrats. Kings must have increased their dividends for 50 years, while Aristocrats is 25 years. Aristocrats are members of the S&P 500s, right? So here's what I want you to understand. Dividend Kings are a subset of Aristocrats. Therefore, all Dividend Kings are Aristocrats, but not all Aristocrats are kings. Repeat that, right? Dividend Kings are Dividend Aristocrats, but not all Dividend Aristocrats are Dividend Kings, right? Because in order to have increased for 50 years, that means obviously you still have to have 25 years. So there are two different lists here. One is the Kings and one is the Aristocrats. The Kings are the cream of the crop. They're the top of the food chain. So this is what we're talking about in terms of Dividend Kings. So what are the benefits of investing in Dividend Kings? For one, reliable income, because these are companies that have, grown over time, over years. They have, strong balance sheets, strong management. So a lot of people look at these as reliable income. Many people who are in retirement transition themselves into dividend for income. Another thing will be wealth preservation. These tend to be stable companies with low volatility, helping to preserve wealth in downturns. That's important because we're also talking about options this morning, right? And when you look at trading options on Dividend Kings, you're talking about something that's not going to move, that will enable you to kind of make money in a fast period of time. Now, it's not always true. Nothing is 100% true, right? All the time. But for the most part, these are stable companies that kick off, money. I told you guys a story about Coca-Cola, which I'll retell in a couple slides, about my personal experience in dealing with Dividend Kings. Also, an inflation hedge. Rising dividends help to offset inflation over time, which helps to maintain purchasing power. So that's something else that you want to look at in terms of getting income and passive income. Thing about Dividend Kings or companies in that space, they are some of the best companies in terms of passive income, right? Passive income is an interesting conversation, and we can have a whole class on that because most of the things that people call passive just aren't passive. They're just not. But this is truly passive. And even I can also make the argument that maybe it's not, because if you're not paying attention to your company, because again, you own a company, then that's problematic too. You don't have to look at
it ain't passive because you still got to check on them.
Yeah, and that's the thing. And that's one of the things that we want to get through with all these classes that we're doing on Sunday morning is if you're going to be an investor, right? If you had a small company that you ran, whether you sold stuff out the back of your home, whether you had a corner store, whatever it may be, you would pay attention to it. People tend to buy stocks and just never look at it and have no idea what's going on with their company. Sometimes that works out in their benefit because they're less to pull the trigger and trade in and out of things. But sometimes it works against you because you don't know what's going on with your company. Your company could be, doing all kinds of nefarious things that's going to bring its price down. Your company CEO could have got murked out on the street, but because you're not paying attention to your company, you don't know what's going on. So when you buy stock, understand you are an owner and act as such. What are the drawbacks of Dividend Kings? Slower growth, right? Dividend Kings often prioritize consistent dividend payments, which can sometimes limit growth potential, right? Because a lot of times they're not investing in research and development. I say they don't do it at all, but they are well-established, stable companies. Sometimes they even have a lower yield. The dividend yield of Dividend Kings may be lower initially compared to high-yield stocks because their focus sometimes is on growing that dividend, right? Past performance. Past success does not guarantee future results, and that isn't anything that you do in investing. Anything that you do in investing, right? So, what are some iconic Dividend Kings in the market? Coca-Cola. Everyone's heard of Coca-Cola, right? They have 60 plus years of dividend increases, right? That's how well established, how large the corporation of Coca-Cola is. What about silver? I don't,
Procter & Gamble is another one. I mean, Procter & Gamble has over $50 billion brand. It's crazy.
I can almost, I don't want to say guarantee because I can't necessarily guarantee this, but what I can say is majority of people who are watching us right now, and we have a lot of folks pulling up.
They already know.
No, what I was going to say is y'all all got a P&G product in your house. I often tell people that joke. I'm like, I can come into your house and I know there's going to be a Procter & Gamble product. And most people don't realize just how many large corporations Procter & Gamble owns themselves.
That's my favorite company on the market.
Yeah, I've heard you say that before. Like they own other companies, right? So, I mean, I used to be a P&G shareholder, but again, I'm trying to grow. But
there's a couple of them on the top, right? So always feminine products: Ariel, Bounty, Charmin, Crest, Dawn, Downy, Fairy, Febreze, Gain, Gillette.
Do you have a picture of that? You can share that real fast. I want people to see just how big Procter & Gamble is. They are a dividend king, but they're a dividend king for a reason. They're a dividend king because they can spin off multiple billion-dollar brands, and that's the thing. Interesting story. Procter & Gamble, the gentleman who founded Procter & Gamble, met because they were dating sisters.
That's hilarious. I didn't know that.
Yeah, they met because they were dating sisters, and they started having conversations. Next thing you know, they built, a company that's been around for a gazillion years. So, what I mean? Shout out to y'all who, build with brother-in-laws and whatnot, But that's just, hey, that's part of their history. But I want to show this some of the brands that are owned by Procter & Gamble. This is crazy. Bounty, Charmin, Crest, Dawn, Downy. They own so many companies that they have companies that most people would consider competitors, right? Where you think
all the industry.
Where you think that these two companies are competing against each other, which is also funny in social media times, right? Because in social media times, you see people say, I'm team this or I'm team that, and they both owned by Procter & Gamble. So, shout to Procter & Gamble. Pampers, right? Pampers.
I mean, did you see Tide and Gain?
They own Tide and Gain.
And Downy.
And Downy. But, I mean, that's the point. So I bring that up to say that these are some of the companies. Everyone's familiar with Coca-Cola and what they do, but we're talking about Procter & Gamble just because a lot of people may or may not understand how powerful and what brands are owned by Procter & Gamble. So let me get back to this so we can finish the slide before we get into some other stuff. Johnson & Johnson, like I told you guys, I worked for them in the past. Actually, Johnson & Johnson might be my only private industry corporate job I've ever had. But I learned a lot there. And one of the things I saw was how a well-run company is run. And shout out to them for the stock options for the employees because, anyway. But they are also a dividend king, and they've been around forever. They're well established. So you see the kind of companies that we talk about when we talk about dividend kings. When we're talking about dividend kings, we're not talking about the stocks that you see go viral, like GameStop. Then GameStop will never, I shouldn't say never, because never say never. But we're talking about well-established brands that a lot of you guys have done business with, whether you know it or not. There's a difference between being a consumer, a producer, or an investor. And the fact of the matter is we are all consumers. And when we talk about dividend kings, these are companies that all of us have consumed in one way or another. Now, the question is, do you want to invest in those companies? Do you want to get on the other side instead of just being a consumer, being an owner? So selecting the right dividend kings, right? You identify companies with 50 plus years of consecutive dividend increases, right? You evaluate their earnings growth, payout ratios, and the cash flow strength. If you're going to invest in a dividend king, you still want to do research. Don't find something that falls on the list of dividend kings and say, well, it's on this list, so I'm going to take it. How long can it remain a dividend king, right? That's something that you have to know. And if you're going to, also look at what sector they're in, right? What sector they're in. Again, I made the statement last week that, some of y'all cussed me out about that. I said sometimes dividends are overrated, but I do feel like they have a specific place in the portfolio. And I said that as someone who but most of my dividends come through REITs, which we're going to have a whole REIT class by itself. That we had it's already put together. We're going to bring that probably in the following Sunday. We're going to have a whole REIT class, but I digress. Let's get back to the slideshow so we can finish this up. Look, what are your long-term goals? If you're going to be a dividend king investor, does that fit with your long-term goals, right? Don't just look at that and say, hey, I'm going to do this. What are your specific long-term goals, right? And make sure that, if you're going to get into a lot of dividend king investing, that you're going to diversify, but also monitor your performance. Something that Corey was saying a minute ago. Corey was getting ready to correct me before I corrected myself. Even if you buy one of these well-established companies, right, you still have to pay attention to what's going on. Are you on the earnings calls? Are you reading their quarterly reports? Are you finding out whether they're making a shift into a different industry? Are you paying attention, right? Are you serious about your investment? Make sure to monitor your investment as it pertains to being a dividend king, right? So just to recap, they're proven investments for income and stability. They're known for their consistent increasing dividend payout. They offer attractive opportunities for wealth preservation and income. They offer steady income and growth potential. Now, here's the thing, wealth preservation, right? Wealth preservation is important because have you built wealth in the first place? A lot of people I know who go to dividend kings have already built their wealth, whether it's through their work, whether it's through their business, and this is how they maintain their wealth. So I think that's part of the nuance of this conversation. When I said what I said, there are people who are trying to build their wealth through dividend kings. Now, could Dividend Kings be a cornerstone of your investment strategy? It's a question you have to ask yourself. There's some great questions in the chat we're going to get to in a second. That was an excellent question, Marquia.
Yes, well, by the way, for anybody that has a question, do me a favor, put a Q in front of the question just so we can cycle back and get to them quickly.
All right, you said Q. All right, you're my favorite local DJ. All right, listen. So additional resources for dividend investing, right? There are tools that you could use. You can go to Yahoo Finance to find out information. There's an actual application that I have on my phone. I'm gonna give you guys right now, which will track your dividends and let you know what your annual dividends will be. This app, let's see, what is the name of this app? It's called. But also, by the way, if you also use Charles Schwab or Thinkorswim or whatever, they will tell you what your annual, monthly, they'll break down how much money you make in dividends or what have you. So there's a lot of different tools out there to track your dividends. I've created actual Google Sheets to do the dividends. One of the things I personally like to do with dividend trackers, and by the way, in my opinion, again, this is just my opinion. This app is called My Stock Portfolio, but in my opinion, the best trackers are ones that you make yourself, whether that's in Excel or Google Sheets. I'm going to tell you why. Because people look at these and from different standpoints. I know that our brother Jose Sanchez, who is a member of the Village, we talked about this in the past, and what he was looking at in terms of dividends and what I was looking at was a little bit different. But one of the things I do with the trackers that I make in Google Sheets is I want to figure out how many shares of a said company do I need to buy for when the dividend pays out for it to buy a full share, whether that's quarterly, semi-annually or annually, right? So that's one of the things metrics that I track. Do I have enough to buy a full share? All right. Now, once I get there, what do I need to buy 5 shares? All right. Boom. Once I get there, what do I need to do? 10, 15, so on and so forth. So that's one of the things that I build into the tracker that I create. And trackers aren't difficult to create in Sheets or Excel. For the folks in the Village, if you're interested in it, I'll create one specifically for the Village and then share it back there with you guys. If you got to be a member of the Village, though. But I digress. So anyway,
a free member or a paid member?
It's a good question, man. For me to take the time to work this out, because I'm gonna create a brand new one from scratch. As a matter of fact, I may create it and share with you while I'm creating it. That's what I'll do. If I do that, it's going to have to be the paid member, Kamari, to answer your question. But yeah, there's a lot of resources around dividend investing. So, if you guys need help with that, please reach out and we'll let you know the various conversations. So now we're going to get to some of these questions, man. My experience, give a couple things about my experience with Dividend Kings and dividend investing in general. I shared this before that the first stock that I ever purchased in my entire life, and this is when I was a teenager and I first learned about investing, was Coca-Cola. And I had no real analysis in buying Coca-Cola other than the fact that I knew the brand, I saw the logo, and I was like, hey, I want to buy Coca-Cola. Everybody seems to drink Coca-Cola, so why would I not invest in that? That was my whole analysis right there. But I was a youngster. I didn't know any better. And I built a position in Coca-Cola literally over a 20-plus year period. Now, what's interesting about that is I built up it was the biggest position I had in my entire portfolio. And I shared this with everyone a couple of years ago when I sold the entire thing. And I'm talking about I was getting literally in dividend payments. I was getting thousands of dollars in dividends at this point over a 20-year period. It wasn't overnight. But the fact of the matter is I started doing some analysis. Now that I was more seasoned and I knew how to run models, I started looking at the fact that Coca-Cola didn't grow the way I needed it to grow. If I would have been in a company that had higher growth, my money would have been threefold. So it made me just take a step back and say, I'm not a retired person. I still have plenty of years on this earth, God willing, but I should be growing my capital. I'm kind of in a wealth preservation mode when I'm still trying to build wealth, right? So that, again, this is personal to me. This is just my experience. I'm not talking about anybody else's experience. So again, to me, all of life is a math equation. So I started taking a look at different things and doing the math. And the math showed me that I should be in a different space, right? Now, if I was sitting on a couple billion, I might just, buy a Coca-Cola and go and chill, similar to Warren Buffett, right? Their dividend payments are ridiculous. But they're at a whole different place in terms of scale. What do you guys experience or any comments or conversations that you guys have had around dividend investing or dividend aristocrats, Kamari and Corey?
Me with dividend investing, when I first started, that's all I did. And now, I used to try to, create my own portfolios, and my portfolios were actually way more successful than the S&P 500. But the amount of work that I had to do to get to that space led to literally consolidate all of that and just buy the S&P because of the work that it took to maintain that portfolio.
Yeah.
I'm not because the portfolios weren't successful. I think the S&P was moving at like 30%, 27, 30%. And my portfolio was moving a little bit bigger than that, like probably like 40 to 45%. But even with that, I didn't want, like, the money was worth it, but the time invested wasn't worth it for the money. So I was like, I could just, like, the disparity in money wasn't so great that the S&P wasn't a, you know what I mean?
No, that's an excellent point, right? Because one of the things that I often tell people, and people get offended when I say this, I say that most people probably shouldn't buy individual stock, right? Most people shouldn't trade options. Most people shouldn't buy individual stock. Most people should probably just buy the S&P 500 and go live life. And I say that
I'm most people.
It's me. I'm most people, right? No, because I say that because if you're going to be actively investing, you need to spend time and energy. And if you don't have that time and energy, be realistic with yourself, right?
That's why I'm sorry. That's why I paired my Dividend Kings and my dividend portfolio down to. I was like, I could just buy the S&P 500. The growth plus the dividend will come out to be nearly the same as what I was getting from my own portfolio. So I was just like, you know what? Let me go ahead. Now I do have a couple individual stocks that I buy. But they're strictly for dividends, and those are QQQM, which is like the high dividend yield QQQ, and I think it's one more, but I'm not looking at my portfolio, but it's just basically the S&P 500 and then the two high yield dividend.
So you brought up another point too. You can also buy ETF that just does like dividend, right? I know VYM is one that Vanguard has. There's a number of them out there. ETF. But
I mean, the Dividend Aristocrats is one, right? You mentioned it earlier.
Yeah. So I'm probably the only person that teaches options and tells people that you probably shouldn't trade options. That sounds like counterintuitive, but it's a fact, right? And again, we're going to tell the facts, right? And if that means that most people say, hey, I don't want to, hear you talk about options, that's fine. But most people shouldn't trade options. And again,
but Jim, let me step in for a minute because I don't want you to overlook something. You do that for a reason, right?
Yes.
Because you are teaching options because you want to give people the opportunity to expand their money earnings potential. Also, you're community minded. Mm-hmm. So you want to say, do what's best for you, as opposed to some of these other folks are saying, oh, you can get rich by investing $1 and turn into $1 million tomorrow.
Yeah, because my thing is it's not for everybody, and you just got to be careful out here, man. Most people shouldn't do it though. That's in my experience, right? And CT brought up a point, right? That he's on Exxon Mobil, right? Lynn, Walmart, Apple, J&J over the past 15 years in a self-directed IRA, right? And have reinvested and not sold. It's been a good move for me, at least. The last sentence right there, right? For me, at least. This is the point. The point is you have to figure out what works for you and do that. What works for me may not work for you, right?
It's a very personal and intimate thing.
Reading this book right here got me looking at XOM. I ain't gonna lie to y'all, man. That's why they set me up with this book. But again, it is what it is.
But I like XLE, but yeah.
Well, that's again, that's buying the whole ETF. Yeah. But again, to Corey's point, what Corey is talking about is what we call lifestyle design. Corey said, I can beat the S&P 500, but I'm gonna spend so much time doing so. What's the point? I'd rather spend my time being with my family or cussing people out on the internet. Whatever you spend your time doing.
However you spend your time.
However you spend your time, right? $40 dates, whatever. Like if you're down, it might be $40 dates. Whatever you spend your time doing, no shots at my brother Dondo. Whatever you spend your time doing, you might be better off buying the S&P 500. There's a post for you, Don. Buy the S&P 500 and go on $40 dates, right? Whatever you want to spend your time doing.
Hold on. You need the horns for that. That was major.
I'm gonna make that T-shirt. I'm gonna make that T-shirt specifically for my brother Don, man. For my brother Don. Don, I got a T-shirt coming your way, bro. Buy the S&P 500 and go on $40. But listen, though, I'm joking. But what I'm saying is, another way to look at this is spend your time working on your skills to increase your income. Now, if you spend your time working on your skills to increase your income, now you can buy more of the S&P 500. That might be the real cheat code right there. That's my brother. He laughed. He know I'm joking with him. Yeah. So that might be the real cheat code. Spend time working on your skills to get more income to then buy whatever that investment may be.
And
but
nobody talks about that except for us, it seems like.
Yeah, because I told Kamari last night, we were at dinner last night, and I was telling him, I said, the funny thing is I get criticized for this too. I get criticized for a lot of my thoughts, but when I tell people that it's going to sound crazy too, multiple streams of income are overrated, right?
Overrated.
Most people that I hear talking about multiple streams of income, those, like, first of all, most of y'all in the same stream calling it multiple streams when it's not. Like,
Correct.
The example he gave is somebody told me they got like 2 jobs, they got multiple streams. You're in the same stream, beloved. You got 2 boats, but you're in the same stream.
Or they got a job stream, or they're in the MLM and they spend $100 in the MLM and they make $20 a year off of it.
And the other part about that is if sometimes, right? So multiple streams, like you may be in, say, real estate and do property management. I mean, multiple streams, but the fact of the matter is, I believe, personal opinion, if most people worked on their skills, that would then increase their income to then be able to buy those other streams, right? But
that's what it's designed to do, though.
Yeah, I mean, your people are starting out like, I'm gonna buy $10 of stock here, then I'm gonna go put $5 here. It's like, yo, what you doing, man? You chasing waterfalls, man. Stick to the rivers and lakes that you used to. Anyway, that's just my personal opinion. I know I get criticized for that too, but it's okay. I'm cool with, I'm cool.
But Jim, let's get to a couple of these questions.
Man. Let's get to these questions, man.
All right, hold on.
Marquia had an excellent question too.
Yeah, I'm gonna come to Marquia, but
the first question was, what about silver?
I'm gonna come to that. I got it. Yeah. Read that, Jim.
Great question. Why are there certain of us who predominantly push dividend investing back in 17 to 20 say it's played out and have now switched to pushing options? Now, for some folks, this is a nuanced question too. Because
no, it's not. But go ahead.
No, to me it is, right? Because for some people, it's a new hustle, right? It's a new hustle. I move from this hustle to the next hustle.
That is the answer.
But to me, that's not the complete answer, right? Because for some people, that's all the information they had at that time. If that's all I know at this time, and now I've come across new information, then maybe, hey, look, I come across this information, right? So I've seen people who mature in the finance space. The more studying, the more reading, the more learning, the more things they do, the conversation changes because now they have new information. And if you aren't able to get new information and change your mind, then I think that's a problem, right? I think there are some people who is just a hustler, I think there's some people are just hustling, but for some people, it's really about them having more information. You disagree with that, Kamari?
So context is everything. So he's talking about the space. So I'll say 90% of the people that are online pushing these ideas, 1, they're not doing them, or 2, it's just a hustle for them. I'll stand on that all day long. 90%.
What about that?
Now, the other 10 might be what you talked about. They got some new information, and then now they want to share with their people in their communities, because that is real too.
Yes, that's all I'm saying, right? So
I'm just talking about generally the masses.
So Jamil says, Pastor and Jay's dividend growth class still relevant. Absolutely is relevant. For those looking for dividend growth, absolutely is relevant. Those brothers have integrity, and their whole thing when they put that class together was specifically about dividend growth. In fact, Pastor is an author who wrote a book about dividend investing, and so he's well the real deal. Yeah, he's well researched. Pastor's the real deal. Yeah, he's well researched. He's actually an author in the dividend space, so his class is relevant. But if that's what you're looking for, though, that's the thing. So here's an excellent question that I think Marquia asked. If you're investing for the long term, how often should you check so that you don't end up in panic reacting? Now, that's an excellent question because there is a part that you shouldn't be checking every day. But that's why I say most people should be buying ETFs, index funds, things of that nature, because there's nothing to check for every day. But also, if you're buying individual stocks for the long term, when we talked about this a couple of weeks ago, they report their information quarterly. Corey had the opinion of once a year or something like that. So it depends upon your personality too. If you're someone that is high strung and has anxiety, then you can't
help it.
Yeah, you got.
I would buy if you high strung, buy ETFs, because my thing is this: is buy self cleansing ETFs because they'll do most of the work for you, right? So if you high strung and you can't really, live without looking at your portfolio every day, you got to buy something that will do most of the work for you and eliminate a lot of that anxiety and stress, because that anxiety and stress will kill you.
And that doesn't mean actively manage cleansing ETFs. We're talking about passively manage ETFs.
Because technically all ETFs are self-cleansing, but yes.
Yeah, but that's what I'm saying. Actively versus passively. Like that's the difference right there.
But I think to Corey's point, though, at a minimum once a year,
okay,
I would say either quarterly or every 6 months. But again, back to your personality, it depends.
So I think you have to take there's so many variables that you have to take into account to answer that question. But I do believe that your point is excellent, that you can't be looking at it every day, especially if you're a high strung person who suffers with anxiety. Like you gotta have, that's a factor. But you also just can't passively buy an individual stock and just never look at it again. You know what I'm saying? Like a lot of people did that, with Enron, but I digress. You just can't do that. You can't do that. So that's my specific thing. I would say what I would say is quarterly, right? Because I also believe in listening to earnings calls. Now I know I'm kind of weird in that, but that's me. I actually listen to earnings calls.
No, you're not. All of us listen to earnings calls.
Not all of it. Well, we mean me, you, and Corey. I mean, but not everybody does, though. Not everybody does.
So, my question of the day: how many of y'all in the audience listen to earnings calls? Just curious. Let us know in the chat.
All right, now put that question back up because that was a good one.
All right, read it, Corey.
Did the stockholders sell UHC after the dude got popped? That's a company that should be failing right now. I worked for them for a year too. So the answer to that is yes and no. UHC is one of the biggest health insurance companies in the world, and people did sell off after the dude got popped, and then it hit a place where the pewter starts puting, and then they start to buy again. When I put up my charts, I can show you exactly where that place happened. I had a line drawn at where I thought they would start buying again, and that's exactly where they start buying again. So I can, matter of fact, let me put my chart up.
But you can look at the volume, and you can look at the volume, and it'll tell you.
So it did move the stock. If your question is, did it move the stock? Yes, it did move the stock.
It moved the stock downward, but it didn't.
It wasn't a short-term blip, right?
Yeah, it didn't keep it there, right?
So, all right, go ahead, Corey. Show that now because I see a lot of questions coming in. I want to make sure we get to them.
All right. Oh, United Healthcare. Why is it not coming up? Oh, UNH. That's why. I put in the wrong thing. So UNH, right? You see, I had my chart marked up for a long time for that level, and it's exactly what happened.
Yeah, because those are. This is a daily candles, right?
Yep.
Daily Hachinaki. Or Hakanachi, them weird candles. I'm cool on that. But anyway, no, but those are those weird candles. But no, I see the drop. Look at that huge drop.
So it dropped from up here, which was $610, and it got all the way down here to $475.
So it dropped from 610 to 475.
Yeah, it took a nasty L.
Man,
and then, but this is the level where it always bounced back. If you look at the chart, you see at this level is where it always starts to bounce back.
At 490, looks like 490 runner.
Now, what was the day the guy got popped?
It was back here. Right, so it was probably back here. So what's this? This is December 4th.
It's interesting how the market you can get news to the market. Figure out what day. If anybody can watching could put it in. I know Kamari's searching now. Maybe you find.
No, I got it. It was December 4th.
December 4th. So that right there, if you look at the chart, December 4th, the stock fell.
And that's exactly when it started dropping off a cliff.
I wonder if Luigi had any put options in before he made his move.
Yeah, right. And then it got right here. It got into that zone where the computer started puting. The buys, and then
y'all be wilding. Y'all be wilding. All right,
so that's about it. You know what I mean?
let's get to some more of these questions.
All right, I got
you
it.
know,
Let's get back to it. Where do we end off at?
I know the beginning was a question about silver, and I was trying to understand the context of that question. What about silver, right?
Well, I was going to come back, but hold on, I'll go to that because I was going to come back to the very end. But here we go. Big Uzi. Thank you for joining us, Big Uzi. What about silver? Give us a little bit more context.
So
Actually,
we
it actually
were
doesn't
talking
even
about
say silver.
Dividend Kings. We were talking about Dividend Kings, and he was saying, "What about silver as part of that?"
Well, first of all, it's not even say silver; it says sliver. So I don't know if he means like, what about buying the sliver of a
Come
stock?
on, man. Stop being
No.
a
Maybe he
grammar
said,
snob.
no. I'm not. That's not. I'm not talking trash.
You are. Listen, I would do that. He's talking about silver.
No, I'm saying, and that's why you feel so. That's why you
That's
feel
right.
you
I
gotta
feel
take up
compelled
for
to
it, right?
defend it, brother.
No,
That's
but
right.
here's where my brain went. Maybe he was talking about buying a sliver. Like, do you have to buy the full share? Like, could you just buy a sliver? Like, you know what I mean?
Okay.
So let's answer both of those questions. Yes,
Correct.
you can buy fractional shares. You can buy a
Correct.
sliver. Now, in terms of silver itself isn't a company, right? So it wouldn't be a king or an aristocrat because silver, it's not a company.
It's not, but there's a silver industry that companies sell silver and they pay dividends.
Yes, but it's not. It's silver.
I'm
itself.
taking a reach for him. But let's see, did he
No.
chime
But
in?
hear me out. Silver is a precious metal, right? It's a
I understand that,
commodity,
Jimmy. I understand
right?
that.
And even within the silver industry, there may be a company, but that company isn't silver itself. They may sell silver. Silver may be part of their business. I want to make sure that we're very clear about this because silver is not a company. It's a commodity. And it should be treated as a commodity. Things that are commodities, like a lot of times, shouldn't be compared to companies because silver itself does not have earnings, right? There is no growth, right? So all the things that you look at when you're evaluating a dividend aristocrat and a dividend king, you will not look at when you're evaluating silver because it's a whole different industry. That's the thing about silver. Now, there's also, when you talk about silver, there's like the physical nature of having precious metals versus buying something like an SLV, which is an ETF that you could buy on the market. Most people in that space of precious metals will tell you that if you do not have the metal in your hand, you actually don't own it. If you buy it on the stock market, what you're buying is an IOU. So it all depends upon getting into silver, how you want to operate. Do you want to physically, tangibly have that precious metal? And many people who invest in precious metals believe that you have to tangibly have that precious metal. Other people who are stock market folks feel like, I just want the price action around said silver, gold, palladium, platinum, whatever it may be, and they'll buy the stock on the stock market according to that. So those are the things, but I wouldn't compare it to the conversation about aristocrat or king because there's no earnings call. There's no silver earnings call. There's no silver profits, right? There's no research.
But there are silver company profits. That's all I'm saying.
But that's the whole separate thing. That's not silver.
I'm assuming. All right, you being too technical now. Give the brother a little wiggle room.
No, it's not about the brother. I want to make sure I answer his question. I want to make sure that there's an understanding though, right? Because if you're talking about a silver company, you're not talking about silver now. Now you may be talking about like, Kirkland, whatever it may be. Like you're talking about a specific company.
But no, there are people who will buy silver companies in place of buying silver because they want the dividend as it pays out.
Yes, but again, that's not the same analysis. That's completely different. And he didn't ask about a silver company. He asked about silver, right?
Well, he asked about sliver to your point, right?
He asked about sliver, and we answered silver. But the fact of the matter is, if you're buying a company that operates in the silver space, a majority of them don't even operate only in the silver space. That's why you can't compare them to silver because if they operate in silver and gold, I'm not going to use them in place of said silver. Because again, the other thing is, you have to understand exactly that's why I asked about the question, because if we're talking about investing in precious metals, they might not even be on the stock market at all. That's a whole other thing. By the way, if you're a member of the village by going to blackwealthrebels.com, there is an entire precious metals course back there taught by yours truly. And you'll understand what I mean when I talk about silver, stacking silver.
Jimmy loves precious metals. That's why his blood pressure is up.
No. Because also when it comes to silver, there's so many variables within silver. Are you talking about numismatic silver? Or are you talking about volume? Because that's a whole different conversation. But let's get back to some of these questions, man.
All right, so you answered the CT one, right?
No, I thought that was an excellent point. He was just making a point about the fact that he found what works for him and is owning those companies, right? Some of those companies are just like strong dividend companies. Some are dividend growth companies, right? So that's what works for him.
Okay.
Okay, so here you go. That's a nice one. That right there. That's
Schwab, yeah.
Schwab one. Yeah. I need the coast. Okay. And again, see, this is what I'm saying. She wants to dump into safer stocks and ETFs just to coast. And that's fine. And that's why it comes down to strategy and your specific strategy. So your specific strategy is you need to coast right now. And that's cool.
But to do that, though, right, you really got to be true to yourself. A lot of people are not true to themselves when they're thinking about investing.
Everyone is better off buying the S&P 500, even y'all. Insider trading is the only way to beat the market. I disagree, but that's okay. I mean, listen, you're entitled to your opinion. I've literally beaten the S&P 500 for 9 consecutive years personally, and it's all documented. But I digress.
But here's the thing. I'll say this, and it's not popular. It's not really about beating the market. It's about doing what's best for your situation and what your situation needs at that time.
This is true, but also my benchmark's not even the S&P 500 because to me, that's not even my benchmark.
Multiple streams of income equals multiple headaches. Now that is a fact. That is a fact.
This can be. We already answered that one.
Alrighty. We did that.
Answered that one too. How does one find Pastor's books? Let me help you with that right now. I'm gonna give you guys this. Shout out, brother Pastor. Here's his book here. You can find it on Amazon. The name of the book is called The Dividend Growth Blueprint. The dividend, how to build a portfolio that pays you for life. Right. This is Pastor's book here. It's called The Dividend Growth. As you can see, I purchased it on February 4th. It's almost 2 years ago. But yeah. But that's the name of the book right there, The Dividend Growth Blueprint. And he is well researched. He breaks down everything you know about dividends. So.
And it is very relevant because he shows you how to do it for income and how to do it for long-term growth.
Right. So that's the name of Pastor's book. So I will co-sign his book. Like a lot of folks I don't co-sign, but yeah, I co-sign Pass. There you go. And we call him Pass like he's actually a pastor. You know what I'm saying? But he teaches investing as well.
I think it's trash, for the record.
What's that?
Your thoughts on the 2-TAC 2 ETF strategy?
I don't think it's trash. I think that it depends upon the person. I think for some folks that works. For some folks,
the context in which it's given, and they say everybody should do this. So that's why I say it's trash.
Well, again, I don't think that everybody should do any one thing, but I don't think it's bad advice because I think that comes from a place of people doing too much, right? I think it comes from a place of people doing too much, and I speak from experience, right? I've been in the markets. I don't even want to say how long because I'm aging myself real crazy if I tell you how long I've been in the market. I've been in the markets like 29 years now, right? And I can tell you in the beginning of my journey, I was wasting my time because I was doing way too much because I was trying to, have all this, I was doing too much. And I think the idea of 2-TAC 2 ETF in terms of people just slowing down and doing smaller amounts, but then building from there, I don't think it's a bad strategy. I think it gets people to a place of understanding.
So you think it's a good one then?
No. I don't think anything for everyone is good.
Well, make a decision, man.
No, hear me out. Because I'm giving nuance.
Get off the fence.
I'm giving nuance. I don't think that the stuff that Dave Ramsey says works for everybody.
Dave Ramsey's trash. He's not for black people. I know Marquis is
here.
Pick
a side, Joe. Pick a side.
No, it's not about picking. It's not about picking a side. It's not about picking a side. Again, is there nuance and context to everything? Yes. People do too much. So the idea of just like really slowing down and doing 2-TAC 2 ETF, yeah. Will that work for everybody? Absolutely not. It won't work for everybody. Absolutely not. Now, there's nuance into that because when they teach 2-TAC 2 ETF, one of those ETFs is what?
I've seen different ones.
No, the main
I've seen different ones.
The main person who came up with that strategy of 2-TAC 2 ETFs, when he teaches it, one of the ETFs is the S&P 500. So you're covered across the board anyway, right? That's why I said there's context to it. That's literally how he teaches it. 2-TAC 2 ETFs, and one of those ETFs is the S&P 500. So, I mean, what are we really talking about? So, I mean, that's the thing there, right?
It's trash.
Listen, man, I'm just giving my opinion.
Kumari, I like Kumari picking the side, though. I'm not mad at it.
See, I think picking sides is the problem with most of the content on the internet. I think that is the problem because people be in gangs and taking sides, and it's like the reality is everything has context and everything is nuanced and everything doesn't work for everybody.
The context is everybody needs a customized strategy.
I agree with that.
That's all.
But also the context is most people are doing too much. There's data to show this, right?
So then if that's the case, that is the case, and that's your position, then one ETF will serve all that for most people, 95% of the people out there.
But the idea of 2 tech, 2 ETF is you get the base with the ETF. Those 2 techs are to give you a little bit of the growth that you won't get with said ETF, right? I get that. There's also a strategy of the 3 fund portfolio, right? That comes from the Bogleheads. The Bogleheads have the 3 fund portfolio. So it's been talked about in different ways from different people. He was asking about that specific one, but it's the same idea that the Bogleheads have come up with. And for those who know what the Bogleheads are, they're followers of the late Jack Bogle, the founder of Vanguard. They believe in the 3 fund portfolio, not 2 tech, 2 ETF, a 3 fund portfolio, which is a broad-based ETF, or excuse me, they believe index funds, not even ETFs. Broad-based index fund, bond index fund, you know what I'm saying? And an international index fund, and you just chill. That's do
that in all one ETF. And so Jack Bogle will probably just say buy one ETF. Warren Buffett will probably say that as well.
Again, it's different things for different folks because you really can't do that, right? Because international, you won't get in the S&P 500. The argument that people make is,
what do you mean you won't get the S&P 500? I don't understand.
Because the S&P 500 are American companies.
Exactly.
Yeah, but if you buy VTI, it does both.
No, it doesn't.
All right, maybe I'll learn something today.
No, VTI is the entire stock market.
That's right. So you get a large portion of the S&P 500 and
the international fund is international companies that aren't on the U.S. stock market.
No, but I'm not talking about that. I'm talking about getting the whole.
No, this is what we're talking about. We're talking about the
strategy.
I'm talking about the 3 fund strategy.
And I'm saying you only need one. You only need one. That's
why?
What I'm saying.
Why do you only need one? What if you want international exposure? What if I want to
well, listen, everything you just said, right? People do too much. Yes. People are overstimulated, right? Everybody said, let's go back to Buffett. You don't need to do all this fancy stuff. Buy one, keep it pushing.
All right, but that's not the point.
For the majority of people. I'm speaking for the people.
You're mixing conversations.
I'm not talking about you, though. I wasn't answering the question.
No, let me finish. When you talk about the Boglehead having international exposure, those are companies that are in the U.S. stock market. So what if I want to invest internationally because I believe that's where more of the growth happens? I'm not going to get that just by buying one, right? And also, you got to understand this. Charlie Munger, Warren Buffett, they say one thing, but they do other things. Charlie Buffett, half of his money is in international companies while he's telling you just to buy the U.S. companies. So, I mean.
I was talking about Buffett, but Buffett,
you saying Buffett doesn't invest in international companies either? Because I can show you
Buffett actually invests in a lot of things, but I don't think you should necessarily do what other people are doing.
Nor do I. But those are the people
you're doing.
Those are the people that
But then you're because now you're backpedaling because you're saying
not backpedaling at all.
Let me finish. You're saying don't do it because that's not what they do. None of us are billionaires, right?
Speak for yourself, but go ahead.
Oh, that's because Jimmy didn't actually lose that Bitcoin in the boat accident. But go on, we having too much fun, y'all. Listen, we argue for fun.
No, we do argue for fun, but I guess the point that I'm making is the idea, the idea behind 2 tech, 2 ETF to me is a good idea because people do too much. Again,
I'm saying it's not.
I'm not saying specifically for that. The idea of doing one thing or the idea of doing the 3 fund portfolio, all of those things come from the same place of most people do too much. And that's the point that I was trying to make. Kamari just likes to, be aggressive and take shots at folks, but
I'm not taking a shot at nobody.
I want to be more nuanced. I want to be more nuanced and have honest conversations. And the fact that it matters is I am. And again, I think that if people took 2 tech, 2 ETF versus what most people do when they own $5 of 600 different companies, I think 2 tech, 2 ETF would outperform that.
Again, I don't care about our performance. I care about doing what's best for you. And I think one ETF will do it all. But let's get back to it. Ariana says she brought it. She brought the book.
Nice. Hey, look, hey, Pass, man. I got a commission. I know Pass is in the building. I saw Pass in the comments. Listen, Pass, we just sold the book for you, bro. Anyway, multiple streams of income should be symbiotic. Otherwise, it could be a headache. That's what I was talking about. Like specifically in the real estate space, people that do property, man, it's all symbiotic, right? A beautician selling hair and hair products is symbiotic. A beautician selling solar panels is not. That's what I was talking about.
I mean, what about doing taxes and selling chicken wings? Does that count? I've seen that.
We missed some comments. I know that Ayana had a great question in here too that I don't think that we answered. Let me make sure I get to that.
Where do you get the info for earnings calls?
I'll put it back up. Here you go. Where do you get the info when the earnings calls are? First of all, shout out to Ayana, who's a member of our investment club.
Hey, Ayana.
So there's a lot of places you can do that. You can go to Yahoo Finance and set up a watch list that will give you news about the different companies that you put in said watch list and let you when the earnings calls are. I use TradingView. I set up watch lists in TradingView, and any news, earnings call, or anything that I want. And by the way, you can do this on the free TradingView too, right, Corey?
Yep.
Yeah, the free TradingView you can do it as well. So go to TradingView, and you can set up a watch list, and it'll tell you about all the news of every company, when the earnings calls are, when anything goes about a specific company. But that's a great question, because even if you're not actively in the market doing whatever it is you got to do, I think that setting up watch lists is a way, to kind of like get started in terms of following.
And there's a bunch of apps like Market Watch and stuff like that also have those earnings calls, times, and all of that stuff.
I'm looking at this comment here from Jamil. I can really only listen to TKO's calls without. I know Vince McMahon and Triple H are as personalities, and I have a lifelong history with the product. I respect that. Hey, Vince McMahon just got exonerated from what I saw, allegedly.
Yeah.
CT guy says, I listen to earnings on StockTwits. Fun to listen with others that are invested and can chat with that community as well.
Yep.
Excellent point. There's
That's
something else.
There's another. Yeah.
Yeah, because that aggregates people that are in the same space, so you get different perspectives in terms of what they hear. That might be a good. That's a good tip right there. Pause.
Yep.
All right. What else do we got? I'm going through this to make sure there's other questions are answered. Boom. Here we go. It's from Pastor again. There is no one size fits all in personal finance, like shoe sizes. Find what fits you. Trying to squeeze into something. Yeah.
I agree.
I agree with that. Dave worked for, then I grew out of it. Good starter material, not really long term. Okay, got you. Confusing the total stock market versus the global market. Yes, he is. He was. That was Kamari doing that. Although S&P 500 are American companies, most big U.S. multinational, like the old 60-40 portfolio, the three-fund portfolio is a bit aged, like using the abacus in the computer world. I don't disagree with that. And that is the argument. That is the argument that a lot of people who are just all S&P make, is that if you are invested in, say, Coca-Cola, right, some of these bigger companies that are in the S&P, they already operate internationally. But then there's the counter argument that those companies don't have the growth that some of the other emerging markets do. In some years, that's been the case, not most years, because tech has been going so crazy over the last decade or so. Kamari is in rare form this morning. Yeah, he is. That's because he ain't got no sleep. That's why.
No, I'm on my coffee, baby.
Yeah, but you still ain't got to get some sleep. I ain't even do that. I ain't get no sleep, but I got coffee, so I'm cool.
That's
like,
right.
No, you still need sleep, beloved. Come on.
The ultimate stimulant.
So Don says, I've been doing two index long before the dude said it. In today's world, only investing in S&P leaves too much money on the table. Exposure to the NASDAQ has done me well. I don't disagree with Don. It's kind of a different version of my argument about
what's the overlap. I'm just asking, what's the overlap? What's the overlap of NASDAQ in S&P? That's all I was going to say.
There is an overlap, but it's also different because you're more concentrated. So if I'm more concentrated, I will have higher gains. It's the reason why I don't do S&P. I do top T, right? And why my returns are better than the S&P doing top T, which is a version of the S&P. But I digress. But it's the same conversation. So Don, we're on the same page, man. Kamari just want to be a hater. I appreciate the comment on the screen. To me, everything to me is hard because of these stupid jobs. Call it stupid jobs. Yeah, that's funny. These stupid jobs. What are your thoughts on Ray Dalio's theory of power change and changing his portfolio to a lot of his allocation to international stocks? I follow the Jack 3 fund portfolio. Excellent question. I like Ray Dalio's approach because it's well thought out, right? And it works for him. And he also believes in commodities. He adds commodities to the mix in terms of his whole strategy in building a long-term portfolio.
And that's the thing. He's thought his strategy out, and then he's executing the thought-out strategy. That's something totally different than most people do.
And he also has access to billions of dollars that he's investing, so it's different for everybody.
Absolutely. But the one thing I will say is I don't get mad at anyone who's thought out their strategy, right? Whether that's your 3-fund portfolio, 2 tech, 2 ETF, whether it's what Don is doing, whether it's some people that just do the 3-fund portfolio. I don't have a problem with any of it. And again, this is not investment advice. If it's thought out, to me, again, everything is a math equation. If you look at the math and you figured out what works for you, because Corey mentioned earlier, Corey said, I figured out how to beat the S&P, but I wasn't willing to put the work in that it takes to do that. So I'm just going to take the S&P's gains and not have to do all that extra work. That works for him, right? So it's really about being intentional and putting thought in my personal opinion. The email when the earnings call are happening, they do that as well, right? If you know, for folks that are really in tune with their companies. Hey, Ayana, so Pass says, I took the day off today and came here to find out I got a book sale. Thanks for Hey, Pass, you know what's love with Pass, man. We always shout Pass out because we do a giveaway. We do a giveaway every Friday, and nobody has given donated to us to give away money more than Pass. Like, so he actually he walks his talk. Like I said, there are a lot of pastors out there that don't, but we respect Pastor Eubanks, man.
For sure.
Stock Twitch sounds fun. Yeah, Stock Twitch is something you got to get in tune with. It's pretty dope. I get emails regarding the earnings call for companies in which I hold stocks. Yes, you can. Great discussion. Thank you, Lisa. Lisa J. Stock. So we know what lane she's in. Shout out to Lisa. Shiv and Shiv, what is your opinion? So SCHD, I think I know a couple years ago, folks were taking their entire portfolio and dumping into SCHD. I saw a lot.
SCHD is the Schwab high dividend fund.
Yeah, so I saw a lot of folks literally taking their entire portfolio and putting it in SCHD, which I thought was kind of wild. But again, it's one of those things. Because all right, here's the thing. SCHB is the broad market. So it's almost the same argument as would you like VTI or would you like VU? It's a personal thing. For a lot of people, they like the broad market versus being more concentrated. I'm a person that believes in concentration. So if it's me, and again, I'm only speaking for me, I'm doing SCHD. But I'm also someone who chooses VU over VTI because I like concentration. So Pat says, I study ETFs and play with combos for fun. One combination I found that works well is SCHD and QQQM. Your age is the mix. For example, 60% QQQM and 40%. Now, see, that right there kind of encompasses what Don is doing. That this is a different way to come at the two ETF, a whole different way with just two instruments.
It's also like a mix of 60,
when I was
talking
earlier, when I was talking about earlier, is I have SPY and I have QQQM and I have it's a REIT. I have the God, I forget the REIT. But those are the three that I have in my portfolio. And so
I've shared my portfolio. I share my entire portfolio. I've shared it with the village several times. And I don't
need to
mind
go look at the REIT one that I have. But I only have three. And so I wanted the QQQM specifically because I want exposure to tech specific outside of the SPY.
Yes.
And so I'm about to change my SPY to top T because I would rather have the top T because I want that concentration also. So and for those who don't know what top T is, go back and watch last week's episode. I broke down what top T is. I have a huge percentage of my portfolio on top T, but my three, I have I have a lot of stuff, but I would say 90% is in three things, which is top T, XLRE, and IBIT, right? So those three things will help me beat the S&P 10 times out of 10. But that's. I have not bought IBIT yet. I have Bitcoin, so I don't need I don't need the exposure on the.
I bought IBIT for one reason because I leverage it to buy physical, tangible real estate. But that's a whole different strategy that I've talked about, and it's in the village. So we'll get into that. But let's get these comments so we can get to our plays. Because we don't want this to drag on too long. But VU VGT is about 90% of my portfolio. See, that's the thing, right? So I ain't mad at you, Don. Like VU is the S&P 500. I like this one right here. What is the ticker for top T? TOPT. The ticker is actually top T. Top T is actually the ticker. It stands for top 20, but TOPT. So you can look that up. Let's see. I would like to have some artwork. There's a company called Masterworks where you can buy artwork. I've heard of Masterworks. I've seen it.
We did a show on that a couple months ago.
Yeah, we definitely did. The overlapping is a reflection of today's world. 10 years from now, that may not be the case. Maybe healthcare is the major player 10 years from now. Don, I did a study.
Everything changes.
I did a study a couple months ago, and what I came up with, I think I put it on the YouTube channel, maybe there. But what I realized is, if you go back to 1980s and you look at the S&P 500, it was all oil companies. It was oil companies and a couple banks. And then you make the shift now, because I was actually doing a class, and the class was about data companies and how data is the new oil. And I was like, literally the new oil. When you look at what the top companies were in the 1980s versus now, they've literally replaced all the oil companies. Now, Exxon, because Exxon is so huge, is still fighting for his life. Exxon is still up there like, yeah, I ain't going nowhere. So, appreciate that down at Top T. So something a little different for the Divi conversation. International Dividend ETF, DVYE. It's another whole rabbit hole. For individual stocks, focus on the dividend growth rate versus the current dividend yield. Dividend growth is what will boost your yield on cost. Google it over time. That's where the real juice is. This is from the author of a dividend book, by the way, who's in our chat right now. For those who don't know, we shared this book earlier. He is the author of the Dividend Growth Blueprint. And he says, look at the dividend growth rate versus the current dividend yield. I think that's an excellent point, because most people just look at the yield because they say, if I give you this, what am I getting back? Not looking at long-term growth. So, righteous indignation. Good morning, y'all. How do you buy gold? Are you talking about on the stock market? Or are you talking about physical gold? If you're talking about physical gold, righteous indignation, I don't know if you're a member of our village, which can be found at blackwealthrebels.com. But if you go to blackwealthrebels.com, there is an entire precious metals course which gives you all the different places to buy physical gold and breaks down what you're looking for when buying said physical gold. But just to answer the question real fast, off the top of my head, go to APMEX, APMEX. They're a quality company, and you can buy gold directly from there. If you're looking for the tangible, if you're looking to buy it on the market, GLD is where you get the price action of gold at, not investment advice. I don't necessarily have a opinion on that per se, because that's a way to attack it. But I don't have an opinion on that. Russell 2000 ETF. Do you think small caps have potential in the next few years? Excellent question. Excellent question.
The market is being carried by 20 companies. So small caps are a crapshoot. I'm just gonna leave it there.
I'm not laughing at that comment, because some people believe. I saw another 3-fund portfolio where you buy the Vanguard small cap, Vanguard mid cap, and Vanguard large cap. You just buy those 3 funds. I'm laughing.
There's a mutual fund for that, right?
I'm laughing at the next comment. Says, because someone said healthcare might be the major player. Says if healthcare becomes a major player in 10 years, it's because they've been killing more people. All right, I'm gonna show you.
Wow.
Let me get into this real fast, right? So that's our presentation. And by the way, thank you guys for tuning in for the Dividend King presentation. I'm going to chop this part of today's class up and put it in the back end of the village, which goes to blackwealthrebels.com, and make sure you join the village. Real quick, before we get out of here, I do want to tell you guys what I'm looking at this week in the market. Core, I'll go first because I got a 12 o'clock appointment, so I want to make sure I make that. So I will go first. Let me share my screen and give you my analysis in terms of what I'm looking at to trade this week. So in terms of my long-term buy and hold, I will not tell you you're wrong. I won't tell you anything. I will not tell you anything. So great point by CT2. Here's another analysis. If interest rates eventually continue to down, the small caps will be in a better environment to grow. Excellent point. All right, so CT be on the ball, man. By the way, Kamar, you checked. Oh, y'all didn't even check the mail yesterday because we was all chilling together yesterday. Check the mail. I want to see what CT sent this, man. But let me pull up my screen real fast. In terms of my long-term buy and hold, I'm probably going to say the same thing every week when I come on here, because I'm always looking at one thing of in terms of it's really the 3 things I named. But top T, I'm always looking to buy more top T. And also, just as an aside, speaking of the whole idea of dividend aristocrats and dividend kings, one strategy that I've seen people use is those that actually do trade is they try to make small amounts in trading, and they will literally take it to buy dividend kings or aristocrats, because they're looking at the dividend kings or aristocrats as being their long-term income, and they use the short-term stuff to then buy the long-term income. So how do we join the community again? Is that right at the bottom of the screen? You'll see blackwealthrebels.com. Okay, you got it. Cool. Bet. All right, so this week I'm looking at Microsoft, right? So you see Microsoft has its ups and downs, and I'm looking on my channels in terms of where it sits now. It's at about 418.95, right? So I'm not going to enter right away, though. I'm not going to enter right away, and I want to make sure I say that because folks will jump in early in the morning. I need to hit around 415. If Microsoft comes down to about this level here, 413.62, anywhere between 415, 413.62, that's where I want to get in, and I'm going to play it to the upside. And I'm looking at about a 415 strike price, and I'm going to play it all the way out to February. I believe February's monthly contract is the 21st, but I'm waiting for more of a drop before I jump in. So I want to make sure I give you that context. But this is what I'm looking at in terms of my swing trade that I want to approach is MSFT. They have earnings coming up. Let's see, when is Microsoft's earnings? Let me give you the exact date. The earnings are the 25th of January. So they have earnings on the 25th of January. So I'm interested to see what the earnings will say for Microsoft. And let me just look at this contract real fast while I'm on here. I'll tell you exactly what the contract costs. So 415 out in February. You have some thoughts, Kamari?
No. Sorry, I was looking at something else.
Okay. What's her name?
No, TSLA.
I'm being smart. All right. So
that's what I was looking at.
A 415 call would be 1775 per. So, about 1700. So that's a little hefty. I know a lot of folks ain't, and again, I'm not giving investment advice. But this is what I'm looking at. I'm looking at for Microsoft to have a small little fall, and then I'm going to play that to the upside on a swing trade. I'm actually wanting to get into some leaps, to be honest with you. But for me to get into some leaps, I'm looking for it to fall a little bit further below the 415. If it falls below the 415, I'm going to buy a contract all the way out to December of 2027 because, yes, they have – yeah, Don, I see your comment, Don. So, yes, they do have December 2027s available for Microsoft. So if Microsoft starts to teeter below 415, starts to head to the 400 range, I'm going to buy a contract all the way out to December of 2027, and I'm probably going to go deep in the money to buy that. It's going to cost me a small fortune, but I think that it's worth it. When you look at what Microsoft is doing in various spaces, whether that's cloud computing, whether that's artificial intelligence, robotics, Microsoft isn't going anywhere. But they are on a little pullback right now. So that's the play that I'm looking at this week is a Microsoft 415 call, but I'm waiting for it to fall. 415 call. I'm waiting for it to fall a little bit closer to that 415 number before I enter. That's what I'm looking at right now. For this upcoming week. Core, I don't know if you have.
That's what Don's looking at.
Don's hilarious, man. Don is hilarious, man. So, comment on past. An aging boomer population will drive a lot of stocks like healthcare, skilled nursing facilities, medical devices, and travel.
That's a fact.
Yeah, society changes everything, man, and healthcare is going to be something that's going to be interesting to watch. Anyway, I know Corey stepped away. I don't know if he had a play that he wanted to talk about this specific week, but that's what I'm looking at. Kamar, I'm looking at Microsoft. Also, if you're doing two ETF, right? Just to agitate Kamar a little bit.
Do me a favor. Come on, let's skip over that. Can you look at TSLA for me?
TSLA. You trying to play an inauguration play? This is your inauguration play right here.
I'm wondering, right? Because I was looking at it. On the monthly, it's at the top of its range. It's coming down to the bottom on the daily. And I'm wondering, does it bounce, like you said, for the inauguration? Or does it break through and go lower?
Bounce. What I see, and, shout out to Pastor, who's also a master charter. And Pastor, you let me know what you see. What I see right here, though, is this on the daily. That's a crazy gap that hasn't been filled.
Mm-hmm.
It's a crazy gap that hasn't been filled. And what I know through my studies and learning from Pastor as well as Antonio is all gaps get filled eventually. So there's a huge gap that has to be filled back here. Let's look at the monthly though. You said you looked at it on the monthly as well. When you said this, I already knew what you were thinking. You were thinking about the inauguration, man.
I mean, that's another reason why I'm trepidatious about even looking at it. Because he's got too much governmental juice right now.
Yeah, he definitely does. Let me check on a weekly as well. Let's see what it looks like on the weeklies. Coming down on the weekly chart.
Coming down on the weekly, coming down on the daily.
The thing about it's so volatile. Like, I like the idea of and also they have earnings coming up as well. They have earnings also on January 25th. Gonna be crazy. You got Tesla, Microsoft, a bunch of tech earnings, but. So that'll be an interesting day in the market overall. And when days like that happen, when you have companies like Tesla and Microsoft both having earnings, I stay out the way, yo. I stay out the way. Corey, did you have anything you was looking at specifically this week that you could show?
Yep. So I'm a few things. If you put my chart back up, Kamar.
CT guy says that if you're a Costco member, you could buy right at Costco for their rounds online site. That may be true as well. Like I don't know what their spot price is versus other spot prices. The best way I found to buy gold actually is if you really want to get into the underworld and get into the streets and find gold brokers, but then you have to be careful with some folks be scamming too. But I have heard that Costco is a great place to buy. I'm not a Costco member. I'm a Sam's Club boy because there's no Costco's around me. You know what I'm saying? So I'm with the
Yes,
blue
there is. You just don't want to drive.
Where's it at? Well, you can. First of all, the fact that you're saying that means that it's not around me. That I have to how far is it?
You just didn't want to know how to drive for that day.
What's the closest Costco? Kamar?
KOP.
I don't go out there.
Yeah.
I don't go out there, man.
All right. So what I'm looking at is the US dollar taking off, which is why you see a lot of these companies tanking.
Mm-hmm.
But with those companies tanking, I'm going to be going to United Healthcare. United Health. UH. What's the United Health? UHB. What is UBH? What is United Healthcare's ticker symbol?
Right there.
UNH. So UNH, even though the dollar is surging, UNH is still surging. It's weird. Insurance companies not paying out makes them actually more what's the name to the market? Like more people want to buy it more.
Bullish makes the market more bullish.
Yeah, it makes them more bullish. And
which is sad when you think about it, but that's business.
And TGT, right? So going back to what we said about TGT and it being undervalued, it's still moving. So I'm still looking at those TGT and those UNHs, the ones that I gave out, and ExxonMobil is still in a good place too. Like I haven't come across anything any new information on these companies. But these are the same three that I've been talking about. ExxonMobil is actually running into earnings. Their earnings is
20?
The 31st.
31st, okay. 31st of January.
Yep.
Okay.
So their earnings is the end of the month. So I like ExxonMobil to enter into
a lot of earnings coming up. This is gonna be interesting. A lot of these earnings are coming up.
Yeah. So into calls, I like those. I like those running into call. I like Target, and actually, weirdly, I like GameStop, but I'm going to not buy GameStop because I just don't like getting involved.
By the way, I just want to put this out there, Corey. This is the stuff that we're looking at during the course of the week that we be trading. For those that are in the village, like when we make trades, we post them in the village. Like I rumble with SPY pretty much daily, and when I actually take a trade, I put it in the village. I gave a swing trade out a couple weeks ago that folks could already cash out on, which was the C3 AI that went up 50% in 2 days. We give it. So this is what we're looking at. But if you're in the village, you'll see what we actually play. That TPT play we talked about for a while, like that was a leap for me where I'm out to 2027 with it.
Mine were out to March, which would have cashed you out already. Mine were the March 140s. It's past 140 already.
Yeah. So the short-term target play we gave also cashed out already.
I still like Target to keep moving.
Yeah.
I like Target
to move for the next couple of years. Listen, I told you I bought a 2027 on Target.
Yes, you did. So I'm still in the ExxonMobil trade. I got into the ExxonMobil trade on the red day because that's what I do. I wait for the red day to get in, especially on calls. And so that play is up for me already. I'm looking at the US dollar to top out and not go much further higher than this, and then start to retrace. So if the US dollar starts to retrace, that means a lot of companies will start to recover. So because again, the US dollar is the US dollar determines a lot of how much the stuff is going on. I don't know what's going on with the doggies.
Hey, listen, that's Kamari's newest family member, man. What's his name, Kamari? He get a name yet?
Yeah.
Chaos.
Ah, so that's the name that stuck. Shout out to Chaos, man. Kamari's new dog.
The kids overruled me.
I'm low key jealous. I'm low key jealous of Kamari, man, because he got the new dog. You know what I'm saying? Although as I hear him now, I'm like,
that wasn't me. That was Corey.
Well, that was Corey's dog. I thought that was Chaos.
No,
oh man, that's my cousin feet in the.
Oh, so I'm the only one without the puppy in the crib, man. Anyway, but listen, Corey, pull up XLE.
So yeah, they
pull up XLE. XLE. So
right.
XLE is the ETF that is for all the energies. I just want to see how XLE is running in comparison.
They track similarly.
Yeah, so that's a cheaper way. If you're interested in the XOM play, a cheaper way to do it is to look at XLE. But it looks like they already took off going,
It's still going. It's still going to go.
All right, so Jamil says, take $40 to switch my membership to BJ's. I told y'all that they're within that space. It's considered like it's classism within the space of buying what you want to call group buying, what have you. So BJ's is like they call that where the undesirables hang at, where the poor folks.
No, they said that about Sam's.
No. I've seen it.
They said it about Sam's. They're on the bottom.
No, BJ's is.
BJ's in the middle.
Listen, I'm gonna show you the
Costco. What you gonna show me? What?
The Wall Street Journal came up with this, not me.
Okay.
Sam's Club is in the middle. Sam's Club is where the working class folks go. Costco is where the uppity folks go, and BJ's is where the poor folks go. And also, the funny thing about it is that's also based on their earnings. BJ's doesn't make anywhere near what Costco or Sam's does. Like, it's based on the companies.
I mean, based on the name, BJ.
That's not me saying it to be saying it. This is what the analysis is.
Listen, man, anything Walmart does, like I hate going into Walmart. They are printing machine, but God, their service is terrible.
That's because a couple things about that before you finish, right? That's because of the Walmarts you're going in. There's levels to Walmart. I realize
I've been to them all. The ones in the more income generating areas are better. They are better.
You got to go to the Walmart outside of a city, period. I'm talking about not go to the Walmarts down south, the rural Walmarts. Them joints
it's different, bro. It's a different experience.
It's a different whole experience. It's like, hold up, Walmart is
not even the same Walmart, bro.
Walmart's in the city are trash. Listen, my favorite Walmart is actually in Deptford, New Jersey. Deptford, New Jersey Walmart. You can't tell me nothing about that. And
look at the income ratio, the disposable income.
Absolutely.
Of them. That's going to be nice.
That's also the Sam's Club I go to. I was telling folks the other day. The Sam's Club.
Wait a minute. You said you wouldn't go anywhere else because it's too far.
Listen,
but you go to Deptford.
I do go to Deptford. Listen, I'm telling you why right now. I'm literally telling you why right now. Let me tell you why. First of all, the Sam's Club and Walmart out there are ahead of the curve in terms of tech. That's when I realized. I said, Walmart is a well-run company because
they are.
They're somewhat of a tech company. That's when I was telling you guys last week on the show that I was reading that Walmart is the number one competitor to Amazon in terms of e-commerce. Walmart is the number one competitor to Target in terms of retail. And Walmart is the number one competitor Costco in terms of that whole sector of retail. I said they're the number one competitor to three other large corporations. But when I was in Sam's Club, I'm sitting there, I'm grabbing my Coke Zero and different stuff I get there, ribeyes and whatnot, right? So young ribeye had to come on, you already know young ribeye had to do his thing. But listen though, so as I'm doing this, is robots coming down the aisles. They have robots, literal robots, no human robots checking inventory. They have robots cleaning the floors. And I'm like, and no one's looking at this. I'm like, hold up, what year are we in? There's robots walking up and down these aisles, cleaning floors and checking inventory. I'm like, okay, all right. I see what's going on here at Sam's Club, right? And they always say that they test things out at Sam's Club before they roll it out to the bigger Walmart. But this isn't an analysis of that company. We'll actually do that. See, Pastor said it. Walmart is a tech company that sells retail products, just like McDonald's is a REIT that sells hamburgers. Great analogy. Everything I just said, Pass encompassed in one sentence because that's what Pass always does.
The ultimate wordsmith.
Yeah, he's the ultimate wordsmith, man. Tesla got a hold of 379, if not going down to 360 for upside trade above Friday's high with a target of 432. Listen, we got the expert in the comments. Like you ain't gonna come a lot of places. We get the experts right in the comment section, man. Shout to Pass, man. Anyway, with that being said, though, you guys got anything else before we get out of here? Because there's something else I want to say, but I don't want to be a blatherskite. So go ahead, Kamari.
I mean, I know what you're going to. I know what you're going to say.
Man, listen, man.
I know you want to argue about. I know you want to argue about something.
I'm about to get out of here. I need to eat breakfast, man. Y'all out here.
Yeah. I gotta get young ribeye.
I
still got a piece of ribeye left from yesterday. Young ribeye, I gotta get to the ribeye. You know what I'm saying? But listen though, go to blackwealthrebels.com to join our village. See, Don said BJ's has those robots I normally try. So when Don writes a sentence like that, I have to like read it a couple times because Don could be talking about a couple different things. What I'll say before we get out of here, I'm going to say, last but not least, we appreciate you guys. This upcoming week, if you're in the village, you'll get access to Stack Sats at Trying, which is the Bitcoin only show that drops in the village before it hits the actual YouTube. So we'll be back there to get that. Wednesday, we have Wealthy Wednesdays with another show. Friday, we do our Friday giveaway, so pull up on Friday. And last but not least, Black Queens Forever, Snow Bunnies Never.
I know it.
Got my 12 o'clock appointment. Peace, y'all. Love y'all.
Good night, y'all. Good evening, y'all.
BlackWealthRebels.com.